India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome. You are with us. This is Bazaar Morning Call and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. The smiles are wide and bright and you've guessed why. It is a Friday. I have with me, as usual, Nigel D'Souza, and today we have Manglam joining us bright and early on the show as well. Hi, guys.
Bright and early. It is Friday, but, as long as the weekend is, this day is equally long. So let's get done with this, and then we have a 3-day weekend.
Long weekend coming up, so I'm really looking forward to that, and beautiful weather here in Mumbai. Little bit of a drizzle.
So long as you're in Mumbai, it's good. Don't dare to try to drive outside of Mumbai because it's a long weekend. All the highways will be jammed.
I did it last week and I said, let's do it before the jam comes in.
Ahead of the curve, right?
Let's get straight to the action, Sylvie.
No, absolutely. So let's, dive right in and look at the cues that we are dealing with. Now, in terms of the global setup, it's a bit of a mixed bag. That's what we've got going. US markets, they were building on gains overnight, and that's become a bit of a pattern over there as well. So again, it was the S&P 500 and the NASDAQ inching higher, 0.2%, 0.3% higher. And the talk yesterday was all about wholesale inflation. Remember, consumer inflation numbers came in on the day of the Fed meeting announcement, and they were quite benign. And yesterday, the PPI numbers that came out, they were actually looking quite okay as well, because there was a decline of 0.2% on May PPI versus estimates of maybe a 0.1% sort of an increase. That triggered a bit of a happy move in the equity markets and an even bigger, happier move in the bond markets, because look at what's happened to the US 10-year. It's been sliding for the past couple of days, and yesterday it came down to 4.2%. So that's a massive drop, 8-9 basis points drop in yields in a span of 2 to 3 trading sessions. So that was good news, and largely that kept fueling the momentum on the equity side as well. For us, another problem area actually, which is why I said it's mixed hues today, is oil prices, because oil prices have been ticking higher as well. That same inflation data perhaps leading to hopes that at some point in time, if not immediately, but later this year, the Fed will cut. And this coupled with the fact that there's expected to be higher demand in the US summer driving season, that's leading to an uptick in prices, and Brent is now approaching 83. The gain for this week is already 3.5-4% on Brent prices. That's a red flag, and that's a cue that we need to be a little wary of. I just want to quickly talk about the setup back here at home, and here the market's pattern has become, a bit of a start high and then kind of grind down. Yesterday was a better day because yesterday we managed to retain a fair bit of the gains. We ended with about a 75-point tally on the Nifty, which wasn't too bad, though the market couldn't once again couldn't retain itself at the highest level, and it was about an 80-point slide from the peak. The Nifty originally was obviously taking aim at 23,500, but that wasn't to be. Anyway, the action is more about mid caps, and that's really showing up in the weekly tally. Look at the way the small cap index is moving. This is index level, by the way. Mind you, stocks obviously have done much better. 4% up on small caps already, 2.5% up on mid caps, whereas the Nifty is just about 0.5% higher, and banks have failed to fire. That's been the other sort of trend from this week. Let's see if Friday can break that pattern or not. But that's been the setup. FIIs, they were once again in sell mode, so we're not getting any consistent buying from the FPIs. There was one day in the middle of the week where there was a nice big chunky buy figure. But again, yesterday was about 3,000 crores of selling, and domestic institutions didn't buy too much either yesterday. So the institutional flows put together were on the negative side. Today, apart from, of course, all the individual, mid-cap level news flow that we'll track, the big corporate developments to track as well. So that should keep the market fairly excited. Vodafone Idea managing to get more investors on board after that follow-on public offer. Now they've done a preferential placement, and it's a pretty large sum, 2,500 crores is what they're raising, and marquee investors coming in, Nokia and Ericsson. So we'll talk about this as we go forward. And then Nigel's been telling us, of course, on Ambuja, the big news from yesterday. They've gone ahead and bought a private cement company. I think it's Hyderabad-based, right, Nigel?
Yeah.
And I guess the value of the deal, the ambitions of that group, I think it's going to be a talking point as well.
Well, that's right. A couple of factors in terms of the global setup. One is the dollar index. It firmed up overnight. It was up by close to around 0.5%. It's cooled off a little bit, in the last couple of hours or so. And the Bank of Japan's decision. We already heard from the ECB, we heard from the Bank of Canada, and we heard from the Fed. Now all eyes on the Bank of Japan. But, it seems for our own markets, the Nifty is making a bit of a meal off this 23,500 odd mark, because the last few sessions we're going to that in that vicinity, and from there we're coming off. So around 23,400 to around 23,500, almost every day we've gone out there. If you want to look at a positive, at least yesterday we came off the high point of the day, but that was relatively lower in comparison to what we have done in the past. Even for the Nifty Bank, it's going to around 50,250, 50,300, and from there, well, it's coming off as well. So both those two remain the crucial marks. On the Nifty, 23,500. On the Nifty Bank, 50,300 going to be crucial marks. What did the FIs do yesterday in the F&O market? Well, they added some long positions in trade yesterday. They added close to 27,000 contracts odd, and they covered close to 18,000 short contracts. And if you look at their positioning as of now, the FIs, yes, they're net short by close to around 35,000 contracts, while the clients, well, they are still net long, but they've come off quite considerably from the recent peak itself. If you pull up the previous plate, that will tell you the picture. That the bulk of that short covering has taken place, because at one point of time, that number was more than 3 lakh contracts on the short side. And on the client side, at one point of time, you had more than 3 lakh contracts on the long side. So some unwinding is what we've seen, some short covering as well is what we've already seen. And just take a look at the short positioning. It was at around 87%, that bar chart will tell you the picture. And from around 87%, it's gradually come down. And now, in fact, it's come down to around 54%. So now they're only mildly net short on the index. Moving to the, the stock futures, we have been making this point. So on the index, they have been, it's been in a bit of a range. Short covering taking place, longs getting unbound as well. But on stock-specific action, the FIs and the clients, both of them, well, they continue to remain their net long bias. So stock-specific action should continue even today. Levels that we're looking at, 23,500, as I said earlier, that's the important level. 23,200 is what we have defended. But if that breaks, then all eyes will be on the 20 DMA. So these are the crucial marks. The big cement deal that was announced overnight, Ambuja Cement's going ahead and buying Penna Cement, 14 million ton plant. Good deal for Ambuja Cements because they're using their cash. They are going ahead to around 140 million tons. For smaller companies like a Sagar, NCL, Orient, India Cements, we could see a positive reaction out there. But will this reduce the dominance of Ramco and Dalmia? Well, that'll be another interesting point to track today. We'll tell you about that in further detail. But let's see on this Friday whether the bulls can take the Nifty and conquer that 23,450, 23,500 mark. But Mangalam, what else?
Take that point, Nigel. The big cement deal perhaps would be the only event that we are watching out for right now from an industry standpoint, from a specific standpoint, because all major events, we had the election, we had, of course, all the ministers getting their portfolios, and then even the FOMC meet outcome, all the major events until the budget are for now out of the way. And that's exactly what the market is reflecting. And the India VIX as well is reflecting that. Before the FOMC meet, it was closer to around that 15 mark, and it's now down to around 13.5, which is a more normalized range for that index. In the last 4 sessions, like you pointed out, the Nifty crossed that 23,400 mark 3 times and couldn't close above it even once. And why is that? Because there is a fair amount of call writing at the 23,400 mark. And these are options that expire next Thursday and the Thursday after that. On June 27th and June 20th, we have 32.5 lakh shares on the 23,400 call on the Nifty. The week after, nearly 14 lakh. And this is 14 days in advance that we're talking about. Similar is the case with the Nifty Bank. In fact, in the last 9 sessions, it's crossed the 50,000 mark 5 times, closed above it just once, and out there as well. Call writers have understood this pattern, and as a result of which, June 19th, which is next Wednesday, we've seen on the 50,000 call, there are 25 lakh shares outstanding. And on the June 26th options expiry for the Nifty Bank, that will also be the monthly options expiry. We have at the 50,000 call, nearly 8 lakh shares which have been written. So while we're talking about resistances, the important part is that in the last 4 sessions, the Nifty hasn't closed below 23,200. And even in the last 5 sessions, the Nifty Bank, while it hasn't crossed that 50,000 mark on a closing basis, it hasn't closed below 49,700. So while there are resistances at upper levels, there is an equally strong support at lower levels as well. And when that happens, portfolios feel a lot better because the broader markets do a lot better as well. From June 4th levels, we've seen near double-digit gains at an index level for both the mid-cap and the small-cap indices. They are at record highs, and individual stocks have gained anywhere between 20, 30, 40. Some have even doubled from June 4 levels. What could be the joker in the pack? I'm looking at the Nifty IT index. Why is that? Because you said that the dollar index firmed up a little bit. IT and mid-cap IT stocks did well in yesterday's trading session. The US yields have cooled off, And if you look at, what's happening in the US IT stocks as well, the US tech stocks, the previous couple of days, we saw a big move on Apple. We saw a decent move come by on Oracle as well. And now Adobe yesterday was up 16% on strong results and good guidance. So the IT pack is one that could actually be a fly in the ointment move on either side, because that's the one thing which we don't control right now. That's more global facing. For now, domestic, everything is under control.
Well, that's right, Mangalam. And yesterday as well, we had given IT, the Nifty IT index as the sector of the day to watch. And just one more stock, Emphasis, if you saw, that stock ended at the high point of the day. Besides being part of the IT related stocks, it has a rebalance that's taking place as well, because there was the stake sale that took over there, which increases the free float. So that's one of the stocks as well we should keep. FTSE as well as MSCI, we're seeing a reject.
Fair point, absolutely. Mangalam, I don't know what's happening with US IT. I just know that Mr. Elon Musk is going to go home with $56 billion. On a side note, that pay package was approved by shareholders. I mean, it's still, I think, in question in the courts. But shareholders said, yeah, sure, you want $56 billion? Go ahead and take it.
To be fair to him, he had asked for a much meatier chunk, say, 10 years ago. And he managed, they were milestone-based payments. He said, if the market cap crosses a certain level, say 5 years later, I will take home this much money. And that time, everyone thought that, okay, this is not possible. So, yeah, let's go ahead and approve it. What went ahead is that, the market cap crossed to the level, Mr. Musk was seeing it. So, one of those visionaries of, Silicon Valley right now.
Absolutely, no taking away from it. Okay, let's get started with the equity call of the morning. Chris Wood of Jefferies says that some changes will be made in the India long-only portfolio. He says an investment in GMR Airports infrastructure will be introduced with 4% weighting, and this will be paid for by reducing the investments in ICICI Bank and HDFC Bank by 1 percentage point each, and by shaving the investment in Axis Bank by 2 percentage points. As for the Asia ex-Japan long-only portfolio, Chris adds an investment in GMR Airports infrastructure will also be introduced by removing the investment in HDFC Bank.
Interesting one, removing the investment in HDFC Bank and adding GMR Airports. Let's get you some money market views as well. Lakshmanan V of Federal Bank says the week started with political uncertainties in the Eurozone leading to the rise in the US dollar index. However, he says gains moderated due to lower than expected US inflation numbers for May, coupled with higher than expected job loss claims data. He says incrementally, crude oil prices surged due to tensions in West Asia, and is optimistic that global oil demand outlook for the current year as well. He adds, post-election outcome, dollar-rupee exchange rates saw some stability, expects the USD-INR pair to trade in a range of 83.30 to 83.70 in the coming sessions.
On bonds, Lakshmanan says the Indian bond yields declined marginally as US Treasuries traded lower after softer than expected US inflation print boosted bets of rate cuts. He says India retail inflation eased slightly in May to 4.75% from 4.83% in April, aided by supportive base effect and lower core inflation. He says coming sessions could see the 10-year benchmark bond yield trade in a range of 6.9 to 7.05%.
Well, a lot of stock-specific action to track for you. Get at that in just a bit in our special Top 10 segment. But let's run you through the list. We look at Ambuja Cements, Vodafone Idea, Suven Pharma, Signature Global, Puravankara. All of them will be reacting to positive news flow. Add to the list Nalco, Havells, L&T Finance, Senco Gold. While on the flip side, Dhampur Sugar Mills could be reacting to negative news flow.
All right. Well, we'll watch out for those stocks in just a bit. But for now, let's discuss the market setup with Dean Kim, Head of Global Research Product at William O'Neill. Dean, great to have you with us as always. So this Indian market has digested a lot of news flow, and the indices are actually not too far away from the all-time highs. The only problem is that banks are failing to fire up. I mean, despite everything, Bank Nifty is still stuck in a range close to the highs. What do you make of the setup over here, and what areas of this market would you be interested in buying into?
Yeah, actually, when I look at the public sector banks, after, the bit of volatility last week, they have come back fairly strongly. And a lot of the public sector banks are setting up, such as Federal Bank, State Bank of India, Bank of Maharashtra. And on the flip side, private banks, yeah, they still need a bit of work to do. But the good news is if I look at, for example, HDFC, is sort of setting up on the right side of the base. Still too early. I think we need to cross 1600 for the idea to work. There's a gap between 1600 to 1700, and if we can get above 1600, probably we'll close that gap fairly quickly. But relative strength is still weak. I think we just have to keep an eye on it. One thing that's preventing private sector banks from performing, in my opinion, is I continue to look at Indian yield curve, still flattish, hasn't changed all that much. So want to see that kind of steepen, and I think that would be the clue for particularly foreign investors to start looking at private sector banks. But within that, I think ICICI is the best one amongst private sector banks, but HDFC is certainly setting up.
All right. Hi, Dean. Good morning and good to see you, Win. What do you make of all the data that we're getting in from the United States? There is some softer inflation data that we've got, a couple of prints as well. Other economic data has been a little softish, and we're hoping for that because from the equity market perspective, you want to see the Fed go ahead and cut some rates. How many are you penciling in? And what's the view on the mother market first, the levels that you're looking at?
Yeah, in terms of the levels, we are at all-time highs, both S&P and NASDAQ. And the recent move has been on the back of, cooler CPI print. So CPI came in at 3.3% versus 3.4% the month before. So we are definitely seeing signs of cooling inflation, particularly if we look at PPI print that just came out this morning. It was negative 20 basis points month over month. So that is an indication that we are on a good path towards slowing inflation. And now, on the other hand, the jobs market continues to hold up fairly well, and that's one of the things that the Fed look for. Job market is still strong, and as well as the PCE, private consumption expenditure data last month, that came in fairly hot. So we are getting a bit of data points all over the place, but the Fed did come out and sort of signal that they are going to be cutting towards the end of the year. They backed away from 3 cuts. The market is now expecting 1 cut, but nevertheless, that's on the right trajectory in terms of rate cuts, particularly in 2025. But in the meantime, the market is performing very, very well on the back of, fairly robust, Q2 earnings, particularly from the tech sector. Large stock like NVIDIA blowout numbers. The AI theme is very strong in the U.S. So those are the things that's sort of driving the market at the moment, coupled with the fact the anticipation of a rate cut. So we'll see what happens when the Fed actually cuts the rates. We may see some volatility then, but for now, certainly the market is, anticipating, solid market performance heading into the second half.
Got that. Let's get back to India then. Even as we're seeing, markets consolidate at higher levels, near record highs for the frontline indices, broader markets continue to do well. Are there any particular themes, names that you like in the mid-cap end of things?
Yeah, it's interesting. We are seeing some, agriculture-related names popping up, such as, you got TVS Motor that's catered to two-wheelers, Ultratech Cement, Danica Agritech, names like that. And certainly Cap Equipment continues to dominate the space. AEC International, Elecon Engineering, Grindwell, Norton. Then, some consumer names are popping up. Minda, Bajaj Auto, as well as Varden Textiles. So I am noticing a lot of names, despite, all-time high in the market, a lot of names are setting up quite well. So that leads me to believe, along with the fact that the RSI is cooling, at the same time, the market is making new highs. Very stable market and a very constructive market.
Okay, interesting. Dean, finally, before we let you go, any thoughts on PSUs here in India? So much volatility, right? But these stocks are what? I mean, despite everything, they're still maybe just 4-5% off the all-time highs. What do you make of the PSU index or any of the PSU stock charts you may have looked at?
Yeah, if you're referring to public sector names, I only look at the banks, but at the moment, so certainly I'm keeping a close eye on the banks. I think those are opportunities. Some of them are setting up to break out from stage one basis, which is what we like. Besides that, I think agriculture related names are starting to perform.
All right, got it. Very helpful conversation, Dean. Thank you very much for being with us. You have a good day, and we look forward to connecting again soon. All right, with that, we need to slip into a quick break before that. But here's a big thank you to all our viewers for your continued support. CNBC-TV18 has recorded a viewership of 93% on counting day for the most unbiased and accurate coverage. Stock markets were reacting to the votes being counted. We had a viewership of 91%. CNBC-TV18 beat competition by a massive margin. From investors to India Inc., the CNBC-TV18 election headquarters was the go-to place for election insights. Once again, thank you, viewers, for reposing your trust and faith in us.
Back, you're watching us here on Bazaar Morning Call. The Gift Nifty indicating a mild green start, but that's about the markets. A lot of individual stocks in focus. And our research team is here with us on Friday with the CNBC TV18's list of top stocks for the day. Let's start with the cement space then. Nigel, big deal that was announced.
Well, big deal was announced. Mangalam, I was actually trying to get a sense whether there was another deal that was announced. So actually, I was a corporate officer of another cement company trying to figure whether there's a deal in the works out there. But surprise, surprise, Ambuja Cements went ahead and they've announced that big deal with Penna Cement for around 10,400 crores. In the last few years, I've been doing some analysis on Penna, waiting for them to come to the IPO market. But they failed twice to come out there. But now we know that they're going to be folding up into Ambuja Cements. What does it bring on the table for Ambuja Cements? Well, it increases capacity by 14 million tons, takes the capacity to around 89 million tons, puts them on course to move from around that 89 million tons to around 140 million tons. With this inorganic growth and with the expansion that they've already announced, they'll be at around 115 million tons or thereabouts. How does it improve its market share? Pan-India by 2%, in South by close to around 8%. Valuations of the deal. If you assume 14 million tons, of which 4 million tons are yet to be operational, then in fact, it comes to around $90 per ton because their entire 14 is included in the enterprise value. If you add the 3 million tons they're talking about because they have excess clinker, then the deal comes down to around $80 per ton. So valuations are pretty much okay. We're assuming that for the additional 3 million tons, they'll have to spend close to around 1,000 crores. Stock reactions, good for Ambuja Cements, positive rub-off on smaller names, Sagar, NCL, India, Orient Cement, all of them positive rub-off. And will there be some selling pressure on Ramco as well as Dalmia, because they have been the kings of the South. Now, suddenly you have the Adani Cement Company that's coming in there and making their presence, even more felt. So we'll keep an eye out on those stocks as well.
Right, okay. So that's about the cement space. The other big deal that was announced yesterday was the one with Vodafone Idea, where they will issue preferential equity to a couple of their vendors. Hormaz.
Another step towards reducing debt from Vodafone Idea, and they announced yesterday that they'll be issuing around 166 crore shares in one or more tranches to two of its vendors, which is Nokia and Ericsson, and those shares are worth around 2,458 crore rupees. Now, to Nokia Solutions, they are going to issue around 102 crore shares worth 1,520 crore rupees, while for Ericsson, they'll be issuing the other 63 crore shares at around 938 crore rupees. The allotment price is 14.8 rupees a share, which is an 8% discount to yesterday's close, but it is at a 35% premium if you compare it to the FPO price, which is 11 rupees a share. And these shares which have been issued to these vendors, they'll come in with a lock-in period of 6 months. Now, the companies also said that this will help in reducing some of their debt. So the street is likely to view this as a positive. Another step towards debt reduction. The stock mostly will likely to open in the green.
Okay, we'll watch out for it. Hormaz, thanks very much. It's actually a morning of deals. Here's the third one. We're talking about Suvin Pharma. Ekta morning. So Suvin is also about a company, and coincidentally, that's also a Hyderabad-based company.
Well, yes, but in a completely different segment of performance. So Suvin Pharma is going to be acquiring this private Hyderabad CDMO manufacturer called Sapala Organics. It basically focuses on more complex drugs such as oligo drugs, etc. And hence that is expected to be the key advantage of this particular acquisition. So Suven is going to initially acquire 67.5% for 229.5 crores, which is 51% of the share capital on a fully diluted basis. FY24 revenue was 65 crores, margins 45% plus, but versus FY23 sales, it was lower. So at FY23 sales were 85 crores. The company says 100% of the acquisition is in the range of 13 to 15 times EBITDA multiple, which is linked on the performance. It comes between 340 to around 450 crores in terms of a total range valuation, the total deal size, which they will incrementally then pay for later on. Dr. Reddy of Sapala, who is basically the promoter, will continue to run the business and will be associated with Suven plus Chance on a consolidated basis as a strategic investor for the Japanese market. I expect the stock to probably be in the green simply because they are getting into a space which has more complex generics or complex drugs involved, and hence that should be a positive.
All right, Ekta, thanks a lot for that. So another deal in Hyderabad in a different segment. The only acquisition I'm interested in Hyderabad is that of a cookie coming in from one of those Irani cafes out there. Incredible ones. But, you know, let's speak about the real estate space. Sonal joins in on both Puravankara as well as Signature Global.
Well, yes, the real estate space has been buzzing. Two stocks in focus yet again, Signature Global, because they've made an acquisition where the wholly owned subsidiary has executed a deed to purchase 3.8 acres of land in Gurugram. This is near the Dwarka Expressway, and land has a developable area of 6 lakh square feet. They've not given more details, but this is something that they have been alluding to earlier as well about land acquisitions. Puravankara, where the board has approved a fundraise. This is via the QIP route, and the amount will not be more than 1,000 crore rupees in one or more tranches. So some fundraise plans here as well.
Okay, thanks for that, Sonal. Well, let's wind this down then with Upasana, who's joining in to tell us about some more stocks that are in the news. Upasana?
First up, let me start with Nalco. The company has executed a mining lease deed with state government of Odisha for bauxite mines with annual production capacity of 3.5 MTPA and reserves estimated at 111 MTPA. Next up is Havells. In order to cater to the increased demand, the company plans to expand its manufacturing capacities of AC at Gillot with the existing capacity of 9 lakh and Tree City with the existing capacity of 11.2 lakh units to 15 lakh units per year is what the company has highlighted. The proposed investment for capacity enhancement will be around 50 to 60 crores, and this will be mainly done via internal accruals. The expected date of completion would be around Q4 FY25 is what the company has highlighted. So all in all, I expect both these stocks to open in green today.
Okay, got it, Upasana. Thanks. We'll watch out for them. Let's get to Vivek, who's joining in, I believe, to talk about more block trades. Today's block trades or details from yesterday's trades, Vivek?
Well, you know, important to take note of what have transpired yesterday as well. We highlighted a few of the block deals that we'll just speak about, but the deals that I'm talking about are the ones that happened in yesterday's trading session, and the full details, you know, names of both the buyers and sellers came out to the exchanges last evening. So first on our list, L&T Finance Holding, like we mentioned, you know, it was a clean out trade from both, you know, BCA Asia as well as some of the P-note funds. But very interestingly, look at the buyer. The buyer was the parent entity itself. So Larsen & Toubro actually went ahead and upped its stake by almost 0.5% yesterday. They held a little over 65.8% at the end of FY24, so 0.5% increase over there. Along with that, Morgan Stanley Asia Singapore PT also picked up you know, the remainder of the shares in the 3.5% block deal yesterday. The other block deal that happened was Senco Gold, a large chunk, almost 5.8% equity. Yesterday changed hands via the block deal window. It was actually Saif Partners that sold 5.8% stake out of the total 10.77% stake that they held at the end of FY25. Who bought the shares? India Acon, ICAV, Motilal Oswal Equity Opportunities Fund, as well as APA Capital Master Fund. They are the ones who picked up the stake in yesterday's block deal. And lastly, Dhampur Sugar, a long-term capital investor, Anil Kumar Goyal, sold close to 1% stake in the company. He held 9% at the end of FY24, so almost 1% pairing of stake. I expect that particular stock to open slightly in the red today.
Right, Vivek, thanks a lot for that. With that, we'll thank the entire team. And in case you missed it, let's give you a quick recap of all the top stocks that we're watching today. Stocks with positive news are Ambuja Cement, Vodafone Idea, Suven Pharma, Signature Global, Puravankara, Nalco, Havells, L&T Finance, and Senco Gold. The only stock with a negative news flow is Dhampur Sugar Mills. Speaking about sugar itself, Manisha was, all over yesterday speaking about sugar, but now she joins in with a roundup of all the action from all the other commodities and currencies overnight. Manisha.
Well, thank you for that. Let me tell you that the sugar prices globally are still trading on a higher side there, but so are the crude oil prices. I mean, after 4 weeks of decline, this is 1 week that the crude oil prices are headed for a weekly gain of 3%. One, the global demand forecast has been on the higher side from OPEC and EIA via their monthly reports that were released in this week. And then there is a strong statement from Russia saying that even as their output for the month of May was higher, but they will comply with the output obligations under OPEC Plus for the rest of this year. Now, that clearly has brought in some support for the prices, but not so much for the metals as a sector. I mean, many of these metals that I'm seeing are showing a decline for this week, with the FOMC members projecting just one rate cut in 2024 and the Chinese buying kind of weak in the month of May. We have seen June start on a weaker note for many of these metal prices. So gold, after declining a percentage point overnight, is ending this week on a negative note as well. So is the case with silver trading at a 1-month lows. Copper prices are trading at a 1-month low also. Copper actually is now down 10% from its all-time highs that it hit in the month of May. And that pretty much is the case with aluminum, zinc, steel on a weaker side. Iron ore prices have also come off its highs. So this is a week that hasn't gone down so well for many of these commodities.
Okay, all right. Thanks a lot, Manisha, for joining in and filling us in with that quick take. For the time being, though, we'll slip into a short break. When you come back, we'll focus on the big cement deal that was announced overnight. Mangesh Badang, the Senior VP Research at Centrum Brokerage, is joining in. You stay with us. Welcome back. Well, let's focus on the big deal. Adani-owned Ambuja Cement has acquired 100% stake in Penna Cement at an enterprise value of 10,400 crores. What does it mean for the industry? Who's under pressure? Who can gain? Well, we have Mangesh Badang, Senior VP Research at Centrum, who joins us on the show. Hi, Mangesh. Good morning, and thanks a lot for joining in. You must be getting a lot of calls pre-market, but just fill us in with a quick analysis. First up, I guess you'll read this deal as positive for Ambuja Cements, because they're going ahead and, acquiring this, expanding their presence as well. Your view first on Ambuja Cements.
Hi, good morning, Nigel. Thanks for having me. I look at this as a very positive deal for Ambuja, and basically the way the group works and the way the aggression that they have shown in growing in the industry once they have set foot on this space is very, very, very good to hear. Basically, we feel that this company with this acquisition can, actually expand its footprint in the southern market where they were not present earlier. And it will also help them grow across, in the country and, show superior volume growth for the next 4 to 5 years. I think they would surpass their target, which they had set for themselves of achieving 140 million metric ton of capacity by FY28. They would surpass it. And in fact, we were looking at this as a very aggressive or, challenging target. And now the way things seem, I think they would surpass it. Slowly but surely, they have added almost 24 million tons of capacity through acquisitions. And the good part is that they have not overpaid for any of those. So in terms of selection of the assets, selection of the companies, and coming up to the price of those, I think they have done a phenomenal job.
Okay, all right. They're going into the south, Mangesh, and we know for the last few years that utilization levels over there are very, very low. So we'll have to see how they ramp up. But we know the group, once they get into a particular space, they can ramp up the asset, they'll sell more cement, and in all probability, they'll turn it around as well. So my question to you is, since you have a larger player that's coming in there, it could lead to further consolidation. How do you approach the smaller names, the likes of Sagar, India Cement, Orient Cement that have some presence in that belt, and there's always some rumor over there. So how do you approach that? And do you see it as a big risk to players who already have an established presence out there, namely Ramco and Dalmia?
Yeah, so as you rightly said, South has been a fragmented market for a very long time. And if you look at the presence, there are very few people or very few players will have close to say 8 to 10% of market share. But you'll have number of players which have market share which is ranging below 5% or less. So what we see is that definitely this will actually lead to some consolidation. And once these players get larger, probably, the pricing discipline should start coming in. The kind of volatility that we have seen in the prices should not be there. I don't think that it's a risk to some of the smaller players just because of the entry of new players, because what we have seen is that some of the smaller players, they do have their own niche as well as the areas wherein they operate in and wherein they have been able to control the distribution as well as the supplies in those markets for a very long time. So no risk as such to those. However, what I feel is that given the kind of measures these companies, the large ones, are taking on cost improvement, if the smaller ones do not follow that, and if the cost of those smaller players remain on the higher side, then obviously profitability wise they would fall behind, and it may not be very feasible to run the cement plant for them, and that should lead to consolidation. For the larger players, I think, better the consolidation, probably they would be in a much better place. But if there is a 4-horse race in one region, it might lead to, a sustained period of pricing pressure. So very difficult to comment on South as well as Ramco and Dalmia at the moment, but I don't see that as a very, very negative write-up.
How big a probability do you assign to pricing pressure in that region, given that, ever since the group has taken over ACC and Ambuja, have you seen any major change in the prices in the regions that they currently operate in?
No changes at all. In fact, prices across the regions have been operating, based on the demand-supply dynamics. And if you look at South as well as some of the Eastern region, the prices are, very close to the bottom. So for going below these levels, I don't see that, these prices will go below these levels. And in fact, there is some chance of improvement once the demand comes back in the second half of FY25. With ACC Ambuja coming, Adani coming with the group, they tried to change certain policies in the way the discounts as well as the invoice pricing happens with the industry. They were not successful and they changed back within the 3 months. So currently there is no change just because of that.
Mangesh, we have been speaking on and off TV, for the last, I think, 12, 13 years or so. And a lot of these assets that we were thinking for many years, will they fold up, will they not? Kesuram got done, 6 months or so ago. Sanghi got done. You have this asset as well. Penna, we were talking about an IPO, I think, 5-6 years ago. And this has got folded up. Clearly, this consolidation is taking place. To play this theme, since South could be in focus as well, which are the companies that have good fundamentals and could probably be an acquisition target as well? That could be secondary, but are well placed as of now, particularly on the cost side.
See, I would not like to name the companies which could be targets because, definitely we don't know where it is going to happen. What I can do basically is I can give you the list of companies' names which are trading at, say, less than $50 EV per ton. And probably then one can take a guess of which of these could be the acquisition targets. But if you look at the pattern in the companies that have been sold till now, most of them were under financial or some kind of balance sheet stress. So be it Sanghi, be it Penna, or now, in certain cases, My Home Industries. So that is something that, one has to look at in terms of, where the next stage is going to be. So the ones which are trading at or below that $50-60 EV per ton, so we can say Sagar is there, Saurashtra is there, and so Heidelberg comes close to that, but slightly higher than what we are here. But the rest, I think, in the smaller ones, so NCL, the likes of NCL, KCB, they are relatively smaller to make any dent, to be honest. And there are certain other businesses associated with it, whether wants to go ahead.
All right, Mangesh, we'll leave it on that note. Thank you very much for joining us today and giving us your perspective on that big deal with Ambuja Cements. With that, let's head back to the market. Anuj is here with us. Let's get his take on today's setup. Anuj, so what do you make of things? I mean, very clearly, it's the broader market, which is where the action seems to be.
Good morning, Surabhi. And since you were talking about Ambuja Cement, it reminds me of that ad, Ye Diwar Tootti Kyun Nahi? And it's like, that 23,500 wall, which is literally the wall which is, in front of you. It's just not breaking for the last few days. And there are two reasons that you are struggling to break 23,500 on the Nifty. The first reason is that there's a lot of call writing at 23,500, and the Bank Nifty is big underperformance. So that's the two main reasons that you are seeing a bit of a struggle around that 23,500 mark. Just to take you through what's happened this week, and look at the Nifty highs and Nifty close. Almost every day, you've gone to 23,400 thereabout. This should be 23. I wrongly mentioned 32, but you've closed much lower than that. But as you said, it's been a week of the broader market. Nifty is up only 0.5%. The mid-cap index is up 2.7%. The small-cap index is up 4%. So for portfolio investors, it's been an extremely strong week. Now coming to the levels to watch on the Nifty and the Bank Nifty. On the Nifty, the support that I'm watching out for is, and now you have to look at hourly charts, 23,350 to 23,360, yesterday's low, and the 20-hour exponential moving average. And the bigger support is at 23,200 to 23,250, the option zone, and also the weekly low over the last 3 or 4 days. On the upside, the resistance comes in at 23,442 to 23,481. Again, I've written 32 by mistake. And the bigger resistance is 23,500 to 23,600. Maybe 32 will also come someday if I've written that. On the Bank Nifty, the numbers to watch, 49,550 to 49,800, the weekly low, and then 49,150 to 49,450, the 10 and 20-day exponential moving average. On the upside, the resistance is well documented. You're seeing Bank Nifty struggle to cross 5150 to 5250, and then the option writers are placed at 50,250 to 50,500. I leave you with the quote of the day on a Friday, and this is "Belief creates the actual fact." This comes in from William James. And by the way, it's a long weekend, so there are 3 expiries today. That's also something that you have to negotiate.
Anuj, that's a very apt quote, I think, for the 32,000 slip-up, right? Belief creates the actual fact. Who knows we actually get there, I like you're saying.
Anuj has been talking about 2, 3, 4, 5, 6. I think, Anuj, maybe we are bracing for the next one.
The next one, actually, if you are the ultimate believer in the India growth story, is 65432. So, reverse it.
65432.
But of course, let's not get ahead of ourselves. One step at a time.
Okay, one step. 32,000 is probably when and not if the India story is to be believed. All right, Anuj, thank you as always for joining in and setting up the market for us. Let's get in Amnish Agarwal, who's the head of research at Prabhudas Lilladher, joining in for a few ideas on investment and his thoughts as well. Amnish, thank you for joining in. Everyone's talking about the big cement space, the cement deal that has taken place. Your thoughts? Anything that you like out here in particular?
Cement, the prospects look to be quite encouraging because if the of the government remains on the infrastructure development, as it seems from the statements which have come so far, I think cement stocks should do well because the demand should grow by 7 to 8%, and the industry is undertaking a lot of consolidation. We have seen now yesterday Ambuja acquiring Penna, then Keshoram was there earlier. So I think the consolidation in the industry should continue. Particularly the big players, whether it is an UltraTech, Ambuja, etc., I think the efficiencies and scale should also come in. So I think cement overall, if you look particularly UltraTech, I think the stock has run up quite a bit. But if you look, say, in the medium to long term, there is still a lot of money to be made in the cement stocks. Near term, you can say fluctuations or variations can be there. But looking at the overall India growth story, cement looks to be a very interesting space to us.
So, Amish, morning. What are your top picks? And just contrast the two, big, sort of the big players for us between an UltraTech versus, say, an Ambuja ACC. If an investor wants to take a pan-India sort of play exposure, then what stock would still get your top billing?
Hi. You see, the main thing is UltraTech is an established pan-India player. And if you look at, say, your EBITDA per ton, etc., the parameters today are superior for UltraTech. But at the same time, Ambuja is also aiming to improve the parameters, improve the efficiencies, go more for the, you can say, green energy and increase EBITDA per ton over a period of time. In terms of valuations, I think there is very little to divide between the two companies. So purely because Ambuja, your UltraTech has seen a big run-up in the last, I would say, 10-15 days. So as of now, I think it's very difficult to choose between the two. But if you look at the broader parameters as of now in terms of profitability, margins and other things, UltraTech seems to be slightly better placed than Ambuja.
Right. Let's talk about the consumer space. You track that closely as well. A lot of people believe that maybe there could be accelerated spending towards consumption, increasing consumption and improving rural economy in the budget. But that thought is now slowly diminishing with hopes of continued policy making and investment in infra as well. Boosts to consumption will be more targeted in nature. Despite all of this, what is your thesis on consumer staples currently?
Okay, you see two things. First, if you look at the entire thesis of government increasing focus on consumption, I think it comes from two factors. First of all, the government has received much more dividend from RBI this year, so there is no dearth of money. Secondly, the way I would say the recent elections have gone, the way there has been stress in rural areas, so there is likelihood that there will be some more focus on the rural areas, some more focus on the bottom end of the pyramid in both rural and urban India. The third factor is that we are going to have normal monsoons this year. So all these 2-3 factors, they point out to improvement in the overall volume growth for the consumer sector. And if you look at the commentary of most of the companies from the past few months, I think there has been a gradual pickup in that. So looking at that, the growth rates this year should be better. And as we go along and as the monsoon progressive, I think the sentiments there should improve. But having said that, today the most of staple companies in particular, they are not, first of all, they are cheap. Secondly, they are sitting at margins which are near lifetime high because the raw materials were quite benign. So one will have to say cherry pick stocks over there. One just can't, you can say blindly say that I want to invest in consumer staple and I will end up making money.
Okay, Amnish, stay on. We'll have more questions for you in just a bit, but we do have to take a quick break. Come back on the other side and we'll also get a technical check going on the market setup with our technical experts, Mitesh Thakkar and Sudeep Shah of SBI Securities will join us. Welcome back. Well, as promised, let's look at the technical setup of the market. Cues have been a little mixed so far this morning, with, of course, US doing a lot better and continuing to add on to the gains. We'll just pull up the GIFT Nifty for you in a bit as well. We have Mitesh Thakkar as well as Sudeep Shah of SBI Securities joining in. Gentlemen, good to have you on. So, the ticker still suggests that we'll probably have a green start. The question is, at the index level, can there be a profitable trade, considering we've been running into resistances around 23,500? Mitesh, let's get your index call first.
Yeah. So on the index, I think now it's become very clear that 23,400 area, is acting as an important pivot. Every time we get an hourly move around that level, we are, not giving a decisive or a strong move above that. I think I'll want to see that happen. Otherwise, there could be a chance of a pullback. Now, we've debated this where this pullback could end up at. I think the first support area on the hourly chart is around 23,200. So if you get an entry point around that level, I think I would still want to attempt a long with a 50 to about 60 point kind of a stop loss, because the broader directional bias remains on the upside. So either buy about 23,410 or wait for that dip to happen.
All right, around 23,410. What about you, Sudeep?
Good morning, Mangalam. Even I have a similar view here that 23,440, 23,450 is acting as a stiff resistance. And in the last few sessions, we have seen selling pressure emerging from those levels only. And on the downside, 23,206, which is Tuesday's low, could form a very strong support from a positional perspective as well. So any dip towards 23,300, 23,320 on the downside, one needs to keep a stop of 23,200 on the downside. And I feel on the upside, maybe this consolidation could get over within a day or two, because 3-4 days we have been consolidating, and even the Bollinger Bands are hinting towards expansion on the upside. So we feel from the current levels, Nifty could head up to 23,550, 23,600 once 23,420, 23,430 is taken out.
Okay, all right, let's talk about some individual stock ideas as well. Mitesh, so what about stock-specific trades? What will you look at today?
Yeah. On the stock side, I have all buy calls today. The breadth of the market is very positive and you're seeing good follow through over there. So Godrej Property is a buy with a stop below 29.95 for targets of 3,100. HDFC Life comes on the list after a long time. Some kind of a reversal yesterday. So buy here with a stop at 682. Look for targets of 715. IndusInd Bank is a buy with a stop below 1490 for targets of 1540, and Emphasis is a buy as well. Keep a stop below 2410. Look for targets of around 2550.
Sudeep, your picks?
Yeah, my first pick would be Cochin Shipyard. Yesterday, we have seen a good, strong action in all these defense names and all these shipping names. So here, I feel Cochin Shipyard has given a good breakout post 4 or 5 days of consolidation. The stock is holding its 10-day moving average, as well as on the daily, weekly, and monthly charts, is looking quite strong. So I feel Cochin Shipyard could be bought here with a 1960 stop loss on the downside and 2060, 2080 targets on the upside. The second stock that I like is Chola Investments. Now, Chola also, in line with all these other NBFCs, have given a good move on the upside. Chola, in fact, has been consolidating in the last 20-25 sessions between 1200 and 1360 on the upside. And yesterday, there was a breakout backed with volumes. So I feel from the current levels, Chola can be bought with 1390 stop loss and 1500, 1520 target on the upside. The third pick that I have is MCX. Now, MCX in the last few sessions have formed a higher top, higher bottom pattern, and the stock is now above its May 27th swing resistance. So I feel from the current levels, MCX can be bought with 3830 stop loss and 4000 target on the upside.
Okay, all right, gentlemen, thanks very much for your calls and your trading ideas. I will connect with you a little later in the course of the morning. Time for a quick break right now. Come back on the other side with the pre-opening rates. By the way, that's the BOJ rate decision that's come in. So no change on rates that was expected. I think in a bit we'll know if they've done anything to change the bond buying program, because there was an anticipation that they'll start reducing the amount of bonds they're holding and the rate at which they're buying bonds from the market. So we'll get to that as well in just a bit. And we'll come back after the break and get in touch with Prabal Sen of ICICI Securities on the GST Council meet. Could consider bringing ATF as well as natural gas under the GST purview. So what would that mean for listed companies? We'll find out.
Welcome back. This is Open Exchange live to you from the CNBC-TV18 Motilal Oswal studio. Now, before we go ahead with the programming today, we would like to take a moment and thank all you viewers for your continued support. CNBC-TV18 recorded a viewership of 93% on counting day for the most unbiased and accurate coverage. Stock markets were reacting to the votes being counted, and that time we had a viewership of 91%. CNBC TV18 beat competition by a massive margin from Investors to India Inc. The CNBC TV18 election headquarters was the go-to for election insights. So, once again, thank you for your continued trust and faith in CNBC TV18.
Okay, all right. Let's move on. Let's get back to the chat that we're having with Amnish Agarwal. Amnish, I wanted to ask you about Emphasis. There's a bit of a rejig that's taking place out there because there was a large trade that took place, and that's why the free float has increased. Because of that, the weightage in the FTSE as well as in the MSCI have gone up, and yesterday we saw part of that taking place. So the stock ended at the high point of the day. Your view on this name or any other mid-cap IT name that you like?
You see, I don't have a firm view on Emphasis, but in the mid-cap IT space, I think your engineering design service companies are the, I would say, segment we have been liking. I think the names there, for example, your LTTS is there, Ceat is there. Okay, even names like Coforge, they look very interesting to us.
Correct. What about Senco Gold? Yesterday there was a large trade that took place, and Nimesh tells us that was a clean-out trade. The stock as is has done very, very well. Any view on this name, or do you prefer the larger names in the space?
The jewelry market as such, it is in a flux as of now because the gold prices have gone up.
Yeah, Yeah, go ahead.
Just you see, gold prices have gone up. That is one. Secondly, the demand has been, I would say, slightly sluggish, and the next few months are also likely to be like you can say sluggish only. Now, having said that, I think as we stand today, I think one would be very cautious entering into the jewelry stocks for the next few months at least. However, on the lower levels, I think the frontline names like you can say Titan can look interesting, but definitely the competition in the industry is increasing. There is margin uncertainty, and even in case of say Senco, I think the throughput of many of the franchises which they are operating that also needs to improve. But the industry has been more like that. There is one valuation of Titan, and then you can say all the stocks are on a different plane. And today, because the balance sheets are better, the investors are ready to look at other names. So from that angle, I think all these names look interesting. But one needs to go into more detail as to what is happening in the industry at this point of time.
All right, final question before we let you go, Amnish. Then your thoughts on the life insurance space. Yesterday, the regulation that came in from the IRDAI put a finality to the surrender value issue. Do you think all of that is done and dusted and now the street is looking ahead? Or do you think that could still impact on their margins going forward?
You see, as of now, you can say the impact is done. But however, if you look at say in the longer term, all these industries are evolving industries. Today, as of now, I think there is now no hangover which is left. But in the long term, as these industries are evolving, they are the growing industries. I think more regulations can come, things can change. But I think from now on, I think some of these stocks have been consolidating from quite a long time, and there could be some uptick in them.
Okay, all right. Amnish, good to have you with us on the show this morning. Thanks very much for joining in. We'll, of course, look forward to more conversations. You have a good day. Now, as promised, let's move forward and talk about the gas space. The first GST Council meeting under the new NDA government is likely to be held on the 22nd of June. Sources indicate the Fitment Committee could study the Oil Ministry's proposal to bring both aviation turbine fuel as well as natural gas under the GST ambit. And this could happen just ahead of the meeting. To discuss about this, more than the possibility, the impact really, and this has been a long-standing demand and what it could perhaps mean for a lot of gas players and also airline companies. We've got Prabal Sen joining in. He tracks the energy space very closely at ICICI Securities. Prabal, happy Friday to you. Thank you for joining in. If this indeed turns out to be true, I'm guessing it'll be a very happy Friday for a lot of people in the gas chain, right? Can you start by sharing some ballpark estimations of how much is the benefit, say, to city gas distribution companies, something like GAIL, etc.? How do the benefits start flowing in if indeed gas is brought under GST and the whole chain has access to the input tax credit claim?
Yeah, it's very difficult to put it into numbers right now, to be very honest with you, because we don't even know what rate will eventually be applied as and when, or if rather, gas comes under the GST. Qualitatively, one can basically very clearly say that once gas is brought under GST, it has two clear benefits. One, from a gas consumer standpoint, specifically industrial users of gas, they have been unable to claim input tax credit even if their output is actually being taxed on GST so far, if they're using natural gas as an input, except for specific cases where they have to put end-use certificates and so on. But it's not a blanket allowance that has been given since gas was not part of GST. So that immediately, again, depending on how much of your cost of raw material is natural gas, that immediately opens up, significant cost savings as a gas consumer, and immediately makes gas much more competitive versus alternate fuels like other liquid fuels, which you might be getting benefits on. So that is number one. Secondly, even for the companies like city gas distribution entities, and this is something Mahanagar Gas has already alluded to in their analyst briefing that was held last week, is that there are elements of operating expenditure as well as capital expenditure on which there is a GST liability, which you are unable to claim any credit on since your final product is out of the GST ambit. So there are significant cost implications, and from a margin standpoint, if it allows you to pass that benefit through to customers and maybe retain some benefit, a 1 rupee movement in terms of your gross margin can easily shift earnings by as much as anywhere between 8 to 18%. MGL probably about 8 to 9%. It's about 12 to 13% for IGL. And Gujarat Gas, which traditionally has a much higher operating leverage, that can see a benefit of close to 17, 18% if there is a 1 rupee improvement in your gross margins as a result of these measures. On a more macro level, if GST actually comes through, for gas demand, obviously that's better news, as I said, because it makes things more efficient and it makes things more affordable, both from a supplier and a customer standpoint. So for a company like GAIL, for example, obviously the higher demand brings into focus the fact that the utilization of their new pipelines, specifically in the east and the northeast, as well as the existing pipelines, can actually go up. Remember that utilization of GAIL's transmission network is still at only about 50% and is likely to go up to only about 60%, even with a decent growth in the next 3 years. So any delta on that, I think, is something that is something that could be a positive. In LPG segment, it could probably see a benefit because of retaining the benefits of the GST.
Prabal, just clarifying the range, you said 1 rupee improvement in margin can improve earnings by 8 to 18%. That's across the city gas distribution space, right?
Yes, it's about it's about 8 to 9% for MGL, about 13% odd for IGL, and close to 18% for Gujarat Gas, as per our estimates. This is not really a calculation done in terms of only GST. I'm saying a 1 rupee movement in terms of gross margins can
due to any issue, yeah.
What about, the rates itself? You said that we don't have any clarity on whether this happens, whether it'll be 12%, whether it'll be 18%. I'm sure you've done some scenario analysis, right? If it is 18%, what could the benefit be? If it is 12%, what could the benefit be?
I think the number that was mentioned was, or the expectation of 12% means that there could be a mid to, low to mid-digit improvement in terms of competitiveness, specifically, let's say, for Gujarat Gas, given that their propane to gas competitiveness is something that is very important. You could probably have a low to mid-digit improvement in terms of cost. But for the others, I don't have any clear numbers as of now. We would like to wait for the rates to come out and see how it is implemented before giving out an estimate.
Okay, all right. Prabal, hi, good morning. Good to see you on the show. Nigel on this side. Prabal, if ATF comes under GST, we know it's positive for aviation companies, but will it have any kind of impact on OMCs as well?
I don't think so. I think a tax is a very clear pass-through in either case. So while it is not exactly a regulated product and the pricing is done on a market basis, but reduction of tax, I would expect, would probably need to be passed through as it is. I don't somehow think that it can actually have a huge impact in terms of margins for the OMCs.
Right. X of all of this, what is your view currently on some of the companies? Oil prices are firming up once again around 82. What's your thought on ONGC? What's your call on GAIL? X of all these GST related issues.
No, I think our view hasn't changed much. One thing that we've always maintained is that as long as crude remains in a certain range, and when I say range, I mean somewhere in the $75 to $85 range, I think the macro remains fairly comfortable for the OMCs upstream as well as for gas companies. Our preference still remains within the OMCs. I think HPCL probably continues to be something that we would look at. Our basic contention is that even with GRMs having gone down, the improvement in marketing margins at the same time means that integrated margins for the company continue to be in the range of around 6.5 to 7 rupees a litre, which is broadly in line with what our base case is, even though we were earlier building in slightly higher gross margins and slightly lower marketing margins. So whichever way the pendulum swings, as long as integrated margins remain in this range, which we believe is fairly sustainable, given the way that the macro is behaving, I think the OMCs remain in a fairly decent space. Having said that, 24 was an exceptional year from an earnings standpoint, so one should be prepared to see a little bit of a decline in earnings over FY25, unless margins, GRMs also recover and marketing margins continue to remain at the current very high levels, which I think is slightly unlikely. As far as upstream is concerned, the government has been extremely prudent in terms of keeping in pace with the changes in Brent and keeping realizations for them at $75 to $76. with gas realizations at 6.5, likely to improve a bit for ONGC as more of KG gas becomes part of the portfolio, which is subject to the HPHT premium. And from a consolidated standpoint, as I said, with HPCL's contribution, consolidated earnings will probably see a steady growth. Gas companies, again, we are seeing about, every report is highlighting 170 to 190 million tons of annualized LNG export capacity in the next 4 to 5 years, which creates a real possibility of a fairly comfortable supply surplus, at least over the next 3 to 5 or 5 to 7 years. So if LNG prices, remain in the $10 to $11 range, I think from a margin standpoint and from a demand standpoint, gas companies should do well. Our preferred pecking order right now remains at GAIL, continues to, I think, look good for us. We are positive on MGL, followed by a sort of cautious add on IGL, and ONGC Oil India are the other names that we would continue to look at in this scenario.
Okay.
With Mahanagar Gas, I think.
All right. Appreciate it, Prabal. Thanks a lot for joining in and filling us in with your thoughts. Wishing you a good Friday ahead. Well, Mitesh is back with us to run us through his 9-10 call. Mitesh?
I'll go with the buy on HDFC Life. I think that's a stock which is reversing after a long time, so should see good follow through and look for targets of 715 here.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's run you through the big deal then. Ambuja Cements has gone ahead and acquired Penna Cement for close to around 10,400 crores. What are brokerages making of it? Well, Jefferies, they maintain their positive stance on Ambuja Cements. They have a buy rating, target price of around 735. They're saying the growing dominance of Ultratech as well as Ambuja, well, that leads to further competition in South India, which could be a little bit negative for regional players. They reiterate, though, that increasing market share of major players is likely to squeeze the smaller players and also could drive further M&A in the sector because of consolidation. Investec, they have a buy rating on Ambuja. They have upped their target price by close to around 25 rupees or thereabouts. They reiterate that Ambuja is their preferred play, and between Ambuja and ACC, they prefer Ambuja. They're factoring in some conservative spreads, utilization levels improve. They're seeing an upside of close to around 40 rupees on their target price, based on this acquisition. Nuvama, they have a buy rating on Ambuja, target price of around 767. They like Ambuja for their healthy capex plans and also their focus on cost efficiency. They believe there's further consolidation in the works with regard to Ambuja because of their good balance sheet. And Penna acquisition could bring in additional volumes to the market, and then it could, intensify competition. And finally, Elara, they as well are positive. They have an accumulated rating. They believe that the acquisition could be margin dilutive in the near term. So that's about Ambuja Cements. Let's talk about Vedanta then. Vedanta had an analyst visit, to their facilities, and Investec has come out with a note. Post this visit, they have upgraded the stock to hold. Target price moves to around 473 rupees. Why has that happened? Because they've increased the multiple. From 3.5 times, they're giving it 6.2 times now. They've also increased the EPS estimates by 7 to around 8%. What are they factoring in? The demerger that they've been talking about, the current LME prices which have improved in the last few months, and the strong cash flow profile as well of the company. They're saying that the management's target of around $6.5 to $7 billion, dollars in the medium term, that's a little bit aggressive, and it looks a little bit steep because it could be ignoring some external risks. What are those risks? Well, in case the management goes ahead and they're very aggressive with their growth aspects, unrelated capital allocation, that's been forever, one factor that's weighed on the company. And also any kind of decline in LME prices could hurt these estimates. And finally, some fundraising, QIP or equity dilution, that could be another negative as well. So that's what Investec has to say. Bottom line is they've gone ahead and they've raised their target price and the multiple as well.
All right, so that's about Vedanta. Earnings estimates as well as multiple is increased. But let's talk about GMR Airports, a big mover, and now it has been included in some important lists as well. Vivek.
Well, good morning. So, Chris Wood in Jefferies' greed and fear note has gone ahead and initiated, weightage as far as India long-only portfolio. He's initiated weightage on GMR Airports. He's given a 4% weighting there. So how is he funding this particular weighting? He's funding it by actually reducing weightage in private banks. So he's reduced 1 percentage point in ICICI Bank, HDFC Bank, as well as 2 percentage points in Axis Bank. Now, also in the Asia ex-Japan long-only portfolio. He's introducing a weightage in GMR airports, and this is done by removing the investment in HDFC Bank. So going long as far as GMR airports is concerned, trimming the weightage on private banks. Now remember, and also an important development happened in GMR airports earlier this week. The company finally got the approval from NCLT. Now this particular approval is for the merger of GMR airports existing airport platform with GIL. So what will actually continue to be listed on the exchanges? GIL will continue to be listed on the Indian exchanges, and this particular merger is expected to take some more time. The earlier indication from the company was that it will happen in Q1 FY25, but we'll wait and watch out for in case there are any delays on that front.
Okay, all right. Thanks a lot, Vivek, for joining in and filling us in with all of those details. Well, we're bracing for a good opening. The Nifty is likely to open at around the 23,460 odd mark. And in terms of stocks that are opening up well in the green, Power Grid is one of the top gainers in today's trading session. We had a large trade actually that we saw on Shriram Finance as well. So that as well is another one that's expected to open up well in the green. The Nifty Bank, well, that's been facing resistance at around that 50,300, 50,250 to around 50,300. Well, that is expected to open up with a gain of close to under 150 points. And the breadth of the market has been holding well for the last few sessions, expecting more of the same even in today's trading session. However, we have a long weekend as well. So that's the first stick out there. Yes, it's in the green, but not as green as we earlier thought. So the markets have opened up with a green of close to around 30 points. The Nifty Bank is up close to around 60 points. What's doing well? Ambuja Cements. The street likes that acquisition out there. Well, that stock, in fact, is flying away. That's up close to around 3%. Nalco, there is some more surety with regard to their bauxite. So that's why, in fact, that stock is up close to around 2%. Vodafone Idea as well. That stock is up close to around 1.5%. What's not doing very, very well? Ramco Cements. Clearly, their dominance, the street believes, will be challenged. And that's why, in fact, that stock is down close to around 2%. Canara Bank as well is down close to around 2% as we speak. From the Nifty pack itself, what's moving around? The top gainer on the Nifty right now is Shriram Finance post that large trade. On the flip side, you have Bajaj Auto that's down 1%. Mangala, what else?
Well, in the mid-cap end of things, the market breadth is firmly in favor of advances. Nearly 5 stocks advancing for every stock which is declining. On the NSE, 1,400 stocks in the green, about 250 in the red itself. Among the stocks that are doing well from the broader markets, we also have L&T Finance, which is doing well. You have the promoters, increasing their stake by about 0.5%, so that's seen some tinge of green. Also, we're seeing continued traction in gas-based stocks. So Gujarat Gas is up around 1.5%. Alembic Pharma continues to do well. We're seeing some traction in India Cements as well, up around 2%. But on the way down, we have Aurobindo Pharma, Canara Bank and Biocon, along with Dalmia Bharat, not doing particularly well. You also are seeing some of the stocks which have been surging earlier continue to move higher, and one of them is Kaya. 2 upper circuits of 20% each over the last 2 trading sessions. And this morning opens up with a gain of about 10%. So it's a big move that we're seeing out there. Jubilant Industries continues with its 5% upper circuit run, taking this week's gains to about 25%. And we're also seeing traction in other sugar names, which continues. So Sri Renuka up around 3%. Bajaj Hindustan up around 4%. It will be interesting to see how Balrampur Chini pans out as well. In the green, the stock has gotten out of FNO ban. We're seeing some traction there. And Senco Gold 2, clean out trade is done. The stock up around 2.5%. So broader markets a lot better than what the frontline index would have you believe.
Absolutely. The sugar trade is really building up. It was about 7-8% yesterday, and all these stocks are off with a pop. Remember, the whole chatter is about higher MSP for sugar and perhaps higher pricing for ethanol as well, the blending program that's underway. And that's keeping this part of the market very excited. So sugar and cement, 2 strong pockets with plenty of gains going forward. If you talk about some more movers and shakers, then what else? Timken India, quick early mover right now, but 6% up on a Timken India. Then you've got something like GIC, but obviously volumes are a little thinner on that one. That's up and about. Sagar Cement 6% higher now. There's the Sanghi Industries, which is up about 8%. So quite a few big movers and shakers in the broader market. But you'd have to say that it's a quiet Friday. It is a quiet morning because at the headline index level, not only is the Nifty flat, Bank Nifty is flat, but even the mid-cap index, the gain at the index level is only 0.25% right now. But it is the smaller stocks, more about small caps, because the advance decline ratio is very, very positive. Still about 1,500 stocks advancing. On the Nifty, one would have to say the weak hands include, of course, some of the bigger banks like Kotak and IndusInd, and Reliance is continuing to be a bit of a drag, as are some of the big tech names. Yesterday, the market had a pillar in form of technology. That's kind of missing today because TCS is dragging its feet, Infosys is down. So let's see, they're close to the flat line, not very deep in terms of cuts. So depending on what happens to some of these bigger names, Reliance and technology, we'll figure out how things go along.
Well, that's right. There's some pre-positioning actually in cement, it seems. So yes, Ambuja Cements is up close to around 2%, but it's come off a little bit from the top. So that's, one stock that the street likes because of the deal that they've done. Dalmia Bharat, that stock is down close to around 2%. Dalmia as well as Ramco. So clearly the street believes that at least in the near term, this dominance in South India could be challenged with Adani Cement coming in more aggressively. The stock actually that's doing very, very well is the one that we pointed out earlier today. Sagar Cement, it has a capacity of around 11 million tons in that region itself. So that's why the street believes that this one could be in for a bit of a re-rating. It trades at around $55 per ton. And this deal was done at around $90 per ton. If you take the expansion, at around $80 per ton. And it's a well-run business with cost efficiency measures as well. So for the time being, that stock is higher and volumes are relatively good as well. So that's why pointing that out.
Okay. Yeah.
I was just looking at some more stocks which had news backing them and have now begun to pick up. And one of them is Havells. After, they've announced the investment of around 50 to 60 crore to expand their capacity. You also have RITES, which is doing well. They won an order worth, or rather they've signed an MOU with DMRC for exploring consultancy and O&M of metro rail systems. So RITES has picked some pace. Purvankara, 1,000 crore QIP, that stock doing well. And Senco Gold too has moved to the high point of trade. We were talking about that clean out trade that took place there.
So yeah, continues to be all about mid-cap stocks, small-cap stocks. That's where the action is because the frontline space continues to be a bit of a drag. Though you'd have to say there's a fair amount of defensive buying in the frontline space today. Britannia, Lever, Titan, Asian Paints, Cipla, Divi's, that kind of a day. More defensive in nature.
Don't also lose sight of the M&M group because they have the group analyst day today. And M&M is actually now among the top Nifty gainers right now at the high point.
Absolutely. All right, well, that's the market. Nifty absolutely quiet and flat with just about a 10-point gain. Let's take the conversation forward. We have Rajiv Agrawal, Managing Partner and Fund Manager at Doordarshi India Fund. Rajiv, great to have you with us. Good to be talking now that all the events are out of the way. And I think the market's wondering what next, because we've managed to go through the volatility, reclaiming all the losses. The Nifty is within striking distance of its all-time highs. But the question is, is there still more ammunition to take the market higher? I mean, what should we expect in the coming couple of months till we at least get to the budget and have more clarity on the policy direction?
Yeah, it's interesting. We are hitting new highs, and I think that's everybody's enjoying those new highs. In terms of what should we expect, I think the market has already discounted some of the expectations that were there with the new government. I think now the policy measures will drive how the markets will behave. So my expectation is that, like what we are seeing today, things will be more on the quiet side over the next few weeks. And once we start seeing some policy measures, because now the Q4 results are out, we have the election results out. So I think the markets will wait for the next set of information that we will start seeing closer to the budget.
Rajiv, let me ask you this. If you had some cash on you today and you were to buy a stock of fresh, would it be ABB or would it be Hindustan Unilever? Or both?
Oh, actually, unfortunately, neither of those are that compelling from a valuation perspective. I think ABB has run up a lot. And so, and Hindustan Unilever or Unilever India has always traded expensively. So we are in neither of those. But obviously, CapEx will be a strong cycle. I think all of us are expecting that. And depending on how quickly you discount the growth and how long you can expect the growth, I think you will have to take a call on ABB. Unilever India, I would be a little bit more cautious just because they have not really delivered and the valuations haven't necessarily come off that much.
All right. Hi, Rajiv. Good morning. This is Nigel on this side and good to have you in. Rajiv, you have a couple of interesting picks. People have been more bullish on Muthoot, but Manappuram has some valuation comfort. I believe that you're quite positive out there. And IIFL Finance as well. That's another one that's been quite volatile, but it appears you have bought that dip. So give us a rationale about some of these companies that you like from the financing space?
Sure. So Manappuram, I talked about it last time, Nigel, when I was on your show. And I think with Manappuram, the issue has always been that it never gets the multiple that its peer Muthoot gets. Muthoot is a much bigger sort of a company than Manappuram. But I think what is interesting in our case, why we like Manappuram, is because we feel that other than the gold loan business, which is almost 50% of the loan book, they have a lot of other areas that they're getting into, be it the MSME loans, be it the vehicle loans, be it the home finance, and obviously the MFI, the Ashirwad. So I think that corresponds to another 50% of the book. And what is interesting with that 50% of the book, Nigel, is that 50% of the book is growing a lot faster than the gold loan book. So we think that there is opportunity in that segment, primarily because Manappuram, as we all know, are in the tier 2, 3, 4 towns, and there is a demand for credit, and therefore Manappuram should be able to grow the book. One of the issues that we hear time and again from various analysts is the underwriting and how good that is. I think to a large extent that underwriting is offset by the additional NIMs that they have. So we believe if you look at today's valuation, Manappuram is trading between 7 to 8 times earnings. And the management, who was on your channel a few days back, have talked about a 20% growth rate. So,
all right. What in the financial space, what else do you like right now? And what are you finding value in? Because you said that neither CapEx, some of the CapEx names, nor some of the consumer names are attractive in terms of valuation. So in a market which is trading a little around 20 times, 21 times, where is it that you're finding value?
Yeah, no, so actually financials does seem to give us good value currently because we think that no matter what happens to the economy, we will need finance. And within the finance, given some of the regulatory actions and given some of the concerns, I think some of the valuations have come off. And, frankly, if you look broadly, I would say there's a lot of value across private banks. If you look at, for example, HDFC Bank or Kotak Bank, they haven't really done much in the last few years. So there is sort of value that exists out there. But we try to focus more on areas which are not necessarily as having as much focus. And that is where I talked about Manappuram Finance and IIFL Finance. The other area, which again in the financial space is pretty interesting, is the power finance segment. So we know that power, India is now around 260 gigawatts of peak power is what we have been recently at. And we will need to build out the base load. And, from a government agency perspective, PFC, REC will be the two funding agencies which will be helping with the build out of the power, both on the base load as well as on the renewable energy side. So I think that could be another interesting area to look at. I would just put a disclaimer here that whatever we are discussing, most probably we own them. And so we are clearly biased about all the names that we are discussing. So people should not take that as a financial advice.
Take that point, just before we continue our conversation, an eye on the markets. As on cue, the Nifty has faced resistance upwards of 23,450 right now. The high on the Nifty is 23,469. The index is now in the red, as is the Nifty Bank, just a little over 50,000, 50,028, 50,029 was the high on the Nifty Bank as well, and now is in the red. What's doing well? The mid-cap index. So the market's sold off from higher levels. Let's see. It's a lot earlier in the day than what it was, in the previous few trading sessions. So does that trade now unwind, and do we see, buying at lower levels for it to see another rally in the second half? Is a question that we'll have an answer to only in the second half. But for now, it seems like, that resistance at high levels is playing out.
Absolutely. It's banks and IT taking the market down, and then other big boys like L&T and Reliance, they aren't helping the bulls case either. They're also on the red side. So all put together, leading to this kind of a down move early on in the morning. Rajiv, I was hearing your answer on PFC and REC, and I go back to that original question. The reason I asked you about those two stocks was just to understand that incrementally, would you still look for more CapEx, old economy facing themes, be it power, be it capital goods, be it sort of, infrastructure? Would you still look at those themes despite the run up, or incrementally would you be more inclined towards buying into rural facing names which haven't done that well? And if it is capex that you still want to stick to, then do share some names if you can of stocks that you like, because valuations are the biggest challenge here for investors.
That's exactly right. Valuations is a big challenge given how the markets have been doing. So I would say, rural theme actually is going to start playing out. It has been, as you said, has been a drag. So we think that rural theme will start playing out. Rural theme can be looked at in terms of the two-wheelers, but also in terms of the financials. They keep coming back to financials just because of valuation comfort. And the two names that we talked about, Manappuram and IIFL, both have significant rural focus. So I think, but the other one that one could look at is autos and auto ancillaries, because we think that two-wheelers will start picking up strongly, and that will help drive some of the opportunities there. The offset to that, of course, we have to look at is where they are trading, what the growth rate is, and therefore what can be our return expectations. Coming to the capex, I do think that power will have a decent amount of capex. Now, in power, the one area that we do like is renewable energy, because we were recently talking to one of the power producers, and they were telling us that renewable energy, given how low the break-evens are now of putting on a new renewable power capacity, they are pretty bullish on that. So I think one could look at in renewable energy space in terms of either solar or wind. We are interested in one of the wind turbine generators in India. There are only two Indian wind turbine generators. One of them we like, and we own that in our fund.
Let me just ask you, since you're talking renewables, Rajiv, by any chance, do you own Suzlon?
No, the other name. So we own Inox Wind
Inox.
through the promoter company, which is Inox Wind Energy, and it is the idea there is that ultimately Inox Wind Energy will do a reverse merger into Inox Wind, so there is some upside through that. But as you can see, both Suzlon and Inox Wind have a pretty big order book, and you can see that over the next few years, given the order book, one could easily project how the numbers will look. Now, both of these obviously have again run up quite a bit. So this is a position that we had for some time now, and something that we are continuing to participate in.
Rajiv, what about old economy? I've been tracking that space for a while now, and not so much of investor interest out there, but plenty is happening on the ground. We had a big deal that was announced overnight. Cement, if you talk about the capex theme, cement's going to be required. You talk about the housing theme, cement is going to be required out there. Any exposure you'll have to the cement names over here? Because there are two sides of the spectrum. One is these larger names will get larger, pricing power will come about. The second one is these smaller guys, some of them are trading at good valuations. So some of these big guys will come and gobble them up, and then they'll re-rate. Your take?
No, absolutely. I think India is becoming very consolidated, to your point, across various segments. And in the cement sector, the big deal that we just talked about, I think clearly everybody is waking up. In the South, there was a natural sort of coziness across various players, and now everybody's waking up and saying, oh my God, we have a new person or a new big player in town. So I think it will be very interesting to see how that plays out. I think the opportunity in my mind is more going with players which are sort of in the medium bracket and who may want to get consolidated with the bigger players. So that could be an interesting opportunity. And either it could be in the South, Northeast also is pretty interesting. So I think there are these smaller players who may ultimately be good targets, and that could be one way to play the cement opportunity. Clearly, I think with the capex and everything, I would also expect that the cement will continue to do well. It's just that the whole business model with cement is you have to be within a particular area around the cement plant, because the cement doesn't travel well, right? So you need to find out where the growth is and participate in those players.
All right, Rajiv, thank you so much for joining in and giving us a lowdown on all the sectors and stocks that you like right now. And just before we move ahead, looking at Nykaa right now. Why is that? Because Nykaa is having its analyst day today, and just ahead of that, they've uploaded their presentation on the exchanges, some of the things that they're saying, and it's a long analyst day, and as a result of which it's a long presentation as well, a 216 slide presentation. But from what we can see right now, the way forward in their global business is something that they're extremely positive on. The global business in 2021 was suppose 1x. They are targeting that to be 15x by FY28 itself. From FY21 levels as of now, it is 5 times that already. So from even current levels, they expect their global business to triple in the next 3 years. They are speaking about strong performance coming in their wholesale business as well. And we will obviously get more details as and when we skim through the entire presentation. But initial comments that are coming in are largely positive, and that reflects in the way the stock price has moved as well. It's moved into the green right now. As the analyst day progresses, we will keep an eye out on how things pan out on Nykaa and what analysts have to say as well. But the big concern for Nykaa is the margin for their beauty and personal care business because of competition, even as growth comes in from fashion and other verticals.
Okay, so Nykaa, let's watch out for more commentary coming in from the company, and Mangalam will keep filling us in. For the time being, we have to focus on another company, and Ceat is the one that's on our radar. The company, of course, had a management discussion, an analyst day, and it said that the FY25 volume growth is likely to be in high single digits to low double digits. The company also aims to expand into the export market, basically grow its export share. To talk about this and, of course, the outlook ahead for this year, we have with us Arnab Banerjee, MD and CEO of Ceat. Mr. Banerjee, great to have you with us. Good morning. Thanks for joining in. So a lot of the commentary coming in from that analyst day seemed very, very optimistic. And one that particularly caught my attention was how that you're gunning to move from being the third largest player in the passenger radial market to becoming the second largest, and basically grow your volumes, grow your exports as well, but also grow in the domestic marketplace. So let's start there in terms of what the trends are looking like so far into the current financial year, and what's your expectation on volume growth? If you could just break that up into first half and second half, perhaps.
Right. So the first 2 months have started off well, and we maintain our volume growth direction, which is about high single digit overall. But we expect higher growth in two-wheelers, relatively higher growth in two-wheelers in both replacement and OEM. I'm talking about the market first. And we expect about mid-single digit kind of growth in the market in four-wheeler and in MHCV. So as far as we are concerned, we maintain our leadership stance in two-wheeler. We expect to grow faster than the market. And we have been gaining share steadily in the passenger car tire segment in replacement. And we expect if the trend continues, then we would be in a good position as far as relative ranking is concerned by the end of this year.
Right. So optimistic outlook here. We'll talk about the market share in just a bit. Mr. Banerjee, just wanted your thoughts on a very near term on raw material costs, because rubber prices have increased in the last couple of months from 150, 160 rupees per kg to around a little under 200 rupees per kg. What is your prognosis on margins, and what are you thinking of in terms of levels that you can maintain this year? Because that's some thing that may concern the street going forward.
Yes, natural rubber price hike has been pretty steep. In fact, for a brief while, it touched 200 as well. And the other part, which is the crude-based raw materials, they have been a little bit range-bound, so there's some relief from there. Having said that, we expect the raw material basket as a basket to go up by about 5 to 5.5% by end of this quarter vis-a-vis end of quarter 4. And there is also EPR, which has come in as a cost. So overall, we need a price increase of around 3.5 to 4%. In replacement and in domestic OEM business. OEM is indexed, so that will come around with a lag of 1 quarter. We have taken about 1.5 to 2% price hike already in replacement, and we expect to cover the balance by end of this quarter.
What would your margin target for the end of this year be? Last year you ended just below that 14% mark.
You're talking of EBITDA, right? So
yes, that's correct.
So as far as raw material is concerned, we focus on the gross margin. We would like to keep the gross margin intact and have more efficiencies in the cost lines, which is between gross margin and EBITDA. Coming to EBITDA, we would like to still continue to deliver EBITDA within a very narrow band with minor fluctuations up and down. There may be a little bit down in the first half of the year when the rates are going up, and when we stabilize, we would like to maintain the same narrow band.
All right, we appreciate.
Could you reiterate the narrow band?
Yeah, if you look at last year, it has been around 13 to 14%, a little bit sometimes higher than 14, sometimes around 13 or a little less than 13. So around that zone.
Okay, all right. Hi, Mr. Banerjee, and thanks a lot for joining in here on CNBC TV18. We would like to see you actually more often on the show, so hopefully you give in to our request a few more times. You're doing around 11,500, 12,000 crores on an annual basis. I believe at optimal levels with the current gross block, you can do roughly around 15,000 crores. What is the capex plan that you have lined up for the next couple of years? And in turn, what is the asset turn? What could be the peak revenue potential from around 15,000 crores?
Yes, so we have decided not to have any capex cycle anymore. So there will be steady capex every year. Last year was about 860 odd crores. This year, the plan is about 1,000 crores. As we keep growing, it will be indexed to around 1,000, maybe 1,050, 1,100 kind of crores. So steady capex will not be investing capex in one project at a time. So it will be parts of various projects so that we keep growing. Now, coming to the turnover possibility, without the capex of this year, we are good for around 15,000 crores. And if we continue to invest at similar kinds of rates, then we will keep growing beyond 15,000 crore. Let's say by the end of FY26, we may reach an annual turnover rate of around 4 to 4,500 crore per quarter.
Okay, all right. So what is the asset turn, sir? If you put 1,000 crores, how much of revenue can you get?
It's different for different categories. It's very high for two-wheelers, about 1.4, 1.5, and little lower for TBR, which is about 1.2 kind.
Okay, all right. What does it do to the debt in your book, sir? Given that you're going to be incurring closer to 1,000 crores, you're keeping that in mind. What does it do to your debt? So the updated debt number, where does it go? And also, what does it mean for your ROCE?
We have been maintaining, we have reached a level of mid-teens in terms of post-tax ROC, and that's one of the matrices we as a management team are driving internally very hard. And we would like to keep a double-digit ROC going forward. Also generate free cash flow. Of course, last year was very high. We would like to be positive in terms of free cash flow. In the last 8 years, only 5 years out of 8 years, we had positive free cash flow. Going forward, we would like to make it a regular thing. Also, and yeah, so if you focus on ROC and free cash flow, everything else would fall into place.
Sure. Okay, and that your shareholders will like that. Sir, I believe you want to increase the share of exports as well in the pie from about 19 to I think 25%. That's the stated objective. Just want to understand the dynamics. Exports, is that a better margin business for you, or are the margins comparable to what you get here in the India business? And by when do you see this scale up happening?
Okay, first things first, exports for us is margin accretive compared to domestic replacement. So it is the highest margin business in terms of EBITDA. And we have primarily 3 markets and 3 categories, which is the agri-radial sector and the passenger car tires and the truck bus radial. Three categories. 3 markets are the EU, in US as well as LATAM. So these 3 are the focus areas and these 3 are the focus markets, and our endeavor would be to take it up to a saliency of 25%, as you mentioned, in 2 to 3 years time, which means doubling of export turnover in 2 to 3 years time.
Okay, so exports will help you sort of increase the margin profile as well, and that's the focus. I just want to go back to one number. You said the volume growth should be in high single digits. Were you speaking about the industry or about Ceat? What is Ceat's own expectations on volume growth?
Yeah, so it should be in high single digit to low double digit for Ceat going forward. It depends on how we sustain the growth rate, which is, Q1 is a seasonal month, positive seasonal month. So we usually start off well in Q1. If we sustain this, we are looking at high single digit to low double digit kind of volume growth.
All right, just one more number, sir. The ROC, you said you're happy at around mid-teens, is it?
We have reached mid-teens and we would like to be somewhere around that.
Okay, all right. And also the debt number in the books, I think most of this capex that you're talking about, 1,000 crores, will be done from internal accruals. what is the updated debt in the books? Your interest cost is, I think, 250, 270 crores per annum. So what is the net debt in books?
The debt was, as of 31st March, around 1,600 crores. And it has a huge negative working capital, which is not sustainable. So we would need a little bit more in terms of working capital engagement. And that 1,000 crore capex is also there. So we don't see too much swing in the debt level right through this year. Neither too much positive, nor too much negative.
All right, not much swing. Let's talk about the market share then and your off-highways business. Market share, the last known number was about a third in two-wheelers, and you had, just about 15% in passenger vehicles. What is your aspiration for the end of this year and the year after for both two-wheelers and passenger vehicles when it comes to market share?
If you're talking about market share in replacement market, our market share in two-wheeler is in excess of 35% at this point of time. And we would like to consolidate the lead with the next player, expand the gap, which is at around 5% right now. In passenger car tire, we are nearing 17% basis last quarter. And we would like a gain of anywhere between 0.5 to 1% by end of this year. And we are a smaller player in truck bus radial segment, where also we are seeing some gains coming in this year. We are going to get commercial production from our Chennai TBR capacity starting Q2, going into Q3. So that will come in handy to increase market share in TBR as well.
And what's your target from the off-highway business over the next couple of years?
Off-highway business is primarily focused on international markets, so market share is not a relevant metric there, but it should contribute heavily to doubling of export turnover, which we are aiming for taking the saliency up to 25%.
Okay. All right, Mr. Banerjee, we will leave it on that note. Thank you very much. It was an exhaustive conversation, helpful one, and we wish you good luck for the rest of the year. Take a quick break on that note, come back on the other side, and we'll connect with Prasanna Kumar Motupalli, Chairman and MD of NLC India, to talk about their business outlook.
Welcome back. Well, interesting moves actually in the broader markets. You have Oil India that was trading in the red. That's moved into the green. So the intraday chart comes out of you, up for you on the screen. You have Dixon Technologies, and everyone's talking about the stock becoming a 10,000 rupee stock. In a matter of a few days, it's become 11,000 rupee stock. So Dixon as well has moved up. And Trent, post the positive commentary that came in from the AGM, the stock is making yet another 52-week high. So solid move is what we're seeing out there. And just one final stock. Ramco Cements, the stock was down close to around 2%. That dip has got bought into. So that nervousness that we saw on the counter, that's got bought into. So keep an eye out on that stock as well. A big player entering their turf, but for the time being, the street believes that maybe in fact they could brush that aside. Let's talk about the power space then. Mr. Manohar Lal Thakkar has taken charge as the Minister of Power. Now the industry is expecting the policy initiatives to continue under NDA 3.0. To discuss more on the power sector and the trends and the business outlook, we're joined by Mr. Prasanna Kumar Motupalli, the Chairman and MD at NLC India. Hi, sir. Good morning and thanks a lot for joining in. Well, tell us what are your expectations from the new power ministry? Plenty has been done on ground, but in NDA 3.0, what do you expect?
Good morning. And at the outset, I would like to congratulate CNBC-TV18 on its 10th anniversary of the India Risk Management Awards for their outstanding efforts in the last decade. As you rightly said, there has been substantial improvement in the coal position and the power position in the country over the last 10 years. From coal shortage scenario, we reached coal sufficient scenario, and power shortage scenario to power surplus scenario. And going forward, the power demand is going to increase at a rate of at least 9% CAGR. So these measures need to be continued in future also, so that the increased power demand can be met through the power generation sources.
Okay. Got it. Mr. Motwalli, thank you very much for being with us today. We also want to take some questions specific to NLC India. I think a lot of your investors want to know when execution will start picking up pace. Because of execution issues, I mean, the fourth quarter numbers were pretty much impacted. I'm just looking at them now. Your top line was down about 30%. Margin moved from 33% to 17%. Can you give us some guidance for overall FY25? How is it going to be in terms of top line growth, margins, and just break it up into both your segments, mining as well as power generation? How do you expect both to fare?
Madam, last financial year, particularly in quarter 1 and quarter 2, there was problems with some land acquisition issues. Because of that, there was a shortfall in the production of lignite and corresponding the power generation also. But in quarter 3, we could solve all the land acquisition issues. And in quarter 3 and quarter 4, our operating performance is reached a normal level and compensating whatever we lost in quarter 1 and quarter 2. So now, as on date, we don't have any land acquisition issues. That's why we are expecting that we maintain the lignite and coal production levels as per the target, and the power generation levels also will be maintained as per the target. So we are hopeful that in the current financial year, FY25, will be much better than the last financial year.
So can you kind of slightly quantify that for us? In the last year, I'm looking at full year fiscal numbers. I think you did about 13,000 crores of top line, but your EBITDA margin was slowly falling. I mean, previous years you were as high as 35-36%. Compared to that, the EBITDA margin came down to around 27% thereabouts. So if you could just quantify that good performance, if mining will fire up and if power generation will get back on track, no land acquisition issues, then what's the top line growth and what's the margin that your investors can expect?
Madam, we are targeting the top revenue of around 15,000 crores in the next financial year. And as you rightly said, there was slight fall in the EBITDA. Now, with all the issues sorted out, now we are expecting in the current financial year, it will reach the normal levels of 36-37%, which you are telling.
All right. And, if we go forward, could you give us the status of the Ghatampur facility? By when does it get commissioned? And also an update on the timelines for Talabira project, because you had given BHEL the EPC contract.
Ghatampur, our unit number 1 is about to be commissioned in COD. COD is about to be declared. We are expecting it by the end of July, the unit number 1. And the unit number 2 will be operational by October end, and unit number 3 will be the March end. So in the current financial year, all the 3 units will be operational and the COD will be declared. And regarding the Talabira Thermal Power Station, we awarded EPC contract to BHEL, and land acquisition activities are in fast progress. And all the mobilization activities, engineering activities, everything is going on as per plan. So we are hopeful that we will be completing the project in time.
Sir, I have 2 more quick questions. One, if you could just tell us whether your regulated equity targets, whether you are on track, how much do you think you'll do in FY25? That's one. Second quick question is on renewables. Apparently, you're also looking at an IPO of your renewable subsidiary. When will that happen?
This is regulated equity. As on date, we are having around 9,000 crores. And in the current financial year, it will be slightly more than that, because we will be adding renewable capacity of around 300 megawatt in the current financial year. But going forward, our regulated equity will become 23,000 crores by 2030, progressively from the current financial year.
Okay. So when is the renewables IPO happening, sir? And, just tell us the mix, your power capacity. Obviously, the large chunk of it is thermal. But how much is renewables? What is the scale-up plan in renewables? And when do you bring the subsidiary to the market? When's the IPO?
Madam, as on date, we are having 1.4 gigawatt of renewable power capacity. Most of that is solar and only 50 megawatt is wind. And under asset monetization, we transferred these assets to our NIRL. the 100% owned subsidiary. And we are going to monetize that subsidiary. And the process of transfer of shares from NLC India Limited to NIRL is on. And we are expecting by end of this financial year or the first quarter of the next financial year that will happen.
Okay, so IPO by the end of FY25 or the start of FY26. Got that, Mr. Motwalli. Thank you very much for being with us and giving us some sense on your business. Good luck with all of those plans. That is NLC India talking about massive margin expansion. They're saying they will revert back. They're 27% right now. They're saying they could go back to 37% margin as now they don't have to deal with some of those land acquisition delays and issues. So that's NLC India. Stock is up in the green. Can't say that for the Nifty or the bank Nifty. It's the same story, folks. It's headline indices absolutely flat, but the mid-cap screen still very, very buoyant.
All right, so what we'll do is take a short break, come back. On the other side, we'll discuss what has been on. All right, okay, it is right away. We have with us a bunch of tax experts joining in. The first GST Council meeting under the new NDA government will be held on the 22nd of June. Sources tell us that the Fitment Committee will study Oil Ministry's proposal to bring aviation fuel and natural gas under the GST regime as well. Simplification of rules will be likely on the agenda, along with the likely discussion on ease of doing business measures. So, to discuss all of this, we have with us Mr. M.S. Mani, who's a partner GST at Deloitte India, and Bipin Sapram, who's a tax partner at EY, joining in as well. Thanks a lot, gentlemen, for joining in. Mr. Mani, remember long conversations we used to have around, the GST when it first happened. And now, there is another meeting which is underway. What are your key expectations from what is there on the agenda, and what do you think would be the biggest benefit?
Look, I think the rate rationalization exercise has been due since a very long time. And I'm mentioning this because that is something on which there was a committee formed, and that committee has submitted its report. So essentially, they need to look at the report submitted. A lot of work has been done by Fitment Committee and Law Committee on that particular report. So it's something which, to my mind, is ready for implementation. That will significantly contribute to the ease of doing business that you were mentioning. And we have been discussing this. I mean, you rightly said we have been discussing this for quite some time. But I think that the fact that collections have stabilized, GST has now become a very accepted tax going by the number of returns filed, the number of taxpayers registered, etc. This is the right time to start looking at, do we really need so many rates? Is it not complicating things, too much? Can't we change the rates and merge maybe two rates into one? This is absolutely the right time to do that. Also, as you said, this is possibly the right time to take the states on board and address their figures of an erosion of their revenue if petroleum products move to GST. And it can be a 2-stage, 3-stage process because the products that impact them greatly are petrol and diesel. The collections from them are very significant for virtually all the states. So they can possibly come at a later point of time. And we could possibly stagger this by saying, let's do natural gas first because it impacts fewer states. Then let's do aviation turbine fuel maybe after 6 months. And then let's do petrol and diesel maybe after a year. But time is right for these two major changes which have been on the anvil since a very long time. There are also various clarifications which are required on various issues that people have been talking of. Those, to my mind, are relatively minor in terms of scale because it may impact some businesses, some industries, etc. But overall, if you look at India business as a whole, they will be greatly benefited if we have fewer rates and if we have petroleum products with a plan as to what product moves into the GST ambit in what period of time.
Absolutely. Mr. Mani, thanks for those opening thoughts. Let's bring in Bipin Sapra of EY as well. Bipin, your thoughts on how this can perhaps be approached. This has been a long-standing demand to bring, petroleum products within the GST ambit. If gas is brought in, then at what rate do you think it will be most apt? And any indication of the kind of savings that perhaps consumers in the chain can have because they will be able to finally claim input tax credit?
I fully agree with you that, and what Mani was saying, that this needs to be brought in. It has been a long-standing demand. There has been a lot of break in the credit chain. The problem here is that the oil and oil products are the biggest source of revenue today. They would, since they have been outside the GST, their revenue has really been also very buoyant. And while the GST revenue has been buoyant, because the oil revenue has been buoyant, the entire indirect tax revenue has done very well. Now the rate, Sonia, you asked that this needs to be, what would be the rate for the gas? I think it's going to be a huge issue if they are just going to turn around and do a revenue neutral rate. It's going to be it'll need to be really looked at. But given that natural gas is something which can be brought in, given that there is a lot of B2B consumption also, and ATF is something which has been a low-hanging fruit for a long time. There needs to be a consensus to bring it, and 5% would be, I think, a good way to begin with. So these are some things which need to be debated. My view here on, as an opening remark, would also be that apart from these things, there would be a lot of other things which the industry would be looking at, and some of these are the lot of litigations which have happened out there in the last couple of in the last 1 year or so, because of time limit of demands coming in. So there would be some solutions which the government may come up with to really solve all of that.
Mr. Mani, what about the gaming space? We understand that online gaming, GST rate, discussion on online gaming, and this is strictly online gaming, nothing to do with casinos or offline gaming, where the 28% is, already there on the face value of chips at entry, which is something that was clarified by a correspondent. On online gaming, what are your expectations here, and what do you think can change?
See, it depends on the agenda that they build for this meeting, because this meeting is coming, I guess, after almost 9 months after the previous. If my memory serves me right, the last meeting was in first week of October 23. And after October 23, we have not had a meeting till now. So possibly the first thing we need to wait and watch is, does online gaming fit into the agenda? Because there are a lot of things to be discussed. And if online gaming were to fit into the agenda, it is something which the operators will be very happy. It certainly requires a clarification. There's no doubt on that. We certainly need clarity on the business. But we have to bear in mind that when you look at the scope and structure that the GST Council has to take up, if we are going to talk rate rationalization, if we are going to talk petroleum products, etc., then possibly online gaming instead of this meeting may get taken up in the next meeting. Or in this meeting, it may get taken up. There may not be a consensus, and they may defer the decision to the next meeting. But at a broad level, there is certainly a need to have complete clarity on what happens to the online gaming, business, because A, it's a big tax contributor, B, it's a big revenue generator, and C, it is a global phenomenon. So we can't keep online gaming, out of the country by taxation measures.
Fair enough, but also this has gone all the way to the Supreme Court, right? Because of the GST notices that were sent, and obviously the company is challenging it. So not sure, Bipin, if you could comment on this, do you expect any discussion even on online gaming? Because I think the whole contention was that on what value are the rate, which is 28%, and then on what value, where in the chain will you apply that rate when it comes to online gaming? And the stance that was taken was that it has to be on the full value of the playing amount.
Yes, spot on, Sonia. And
Surabhi, sir, this is Surabhi here. Sonia not with us on the show today.
I'm so sorry.
No problem. Yes, sir.
So when this tax came in October, it was going to be reviewed in 6 months' time, and the 6 months, at the end of 6 months, because the election process was on and there was no GST Council meeting, they have deferred it to now or maybe in the next council meeting. I think the need for the industry is imperative, and the value on which it has been implemented was going to be the gross gaming revenue, the GGR, but they went ahead and did it on deposit, really putting a lot of pressure on the margins which these companies make, which has impacted the investments and how these companies are growing in the market. So I think the government and the industry has been representing for this to bring back the valuation at a rate which is commensurate with how other countries value such goods, and it should be the gross gaming revenue. Yeah.
All right, gentlemen, thank you so much for joining in and giving us a lowdown on what one can expect, what are the possibilities, what could perhaps happen. But we will leave you at that, and with a promise to reconnect with us post the GST Council meet that takes place, and thereafter with all the clarity that we will have as to what has come out of that meeting itself. But don't lose sight of the market. We spoke about there being a dip from our levels upwards of 23,400 a little earlier in the day. That dip seems to have been bought. Now we're back above that 23,400 mark on the Nifty, led by the Nifty Bank itself. And both of them actually have been supported by one large weight, which is HDFC Bank. That has moved to the high point of trade. A decent traction is what we've seen on that one. And giving it company also are ICICI Bank and Axis Bank. We've been hearing from all market experts saying that maybe private banks are one pocket of value in an otherwise stretched valuation kind of market. And they are finding some sort of support at lower levels. So Axis Bank, ICICI Bank, HDFC Bank, all of them off lows. Whether this sustains or not, again, is for us to see through the course of the day. So good time to get in Mitesh Thakkar as well for trades at 10. Mitesh, what have you made of the market move so far, and what are your trades at 10?
The morning has been very quiet, but the good thing is that despite the fact that we are repeatedly seeing some supply emerge at these levels of 23,400, we are not breaking down, and we are now in fact sustaining above that. So in that sense, I would say that trade is long bias, though you might want to avoid the index because there's still a lack of momentum. So the stocks on my list are one, National Aluminum. I think that's a stock which after a few days of consolidation is now showing signs of traction on the upside again. Keep a stop at 188, look for targets of 200. And amongst the finance names, you were highlighting some banks. I have in fact Shriram Finance as a buy call. Keep a stop at about 2,700 for targets of around 2,830.
Okay, all right, got it, Mitesh. Thanks very much for your trades. We'll come back and touch base a little later in the day. Right now, we have to take a break. We'll put the focus on the commodity space on the other side. Manisha will be joining in.
Right, looks like the market is now picking pace. 23,437 for the Nifty, a little over 50,000 for the Nifty Bank as well. The Nifty Bank has actually crossed the highs of the morning and now is building onto the gains that we saw. It's the same stocks that we spoke about just moments ago. HDFC Bank, we have ICICI Bank, Axis Bank, all of them supporting the course of the Nifty Bank. And for the Nifty itself, we are seeing some support come by from some other financials as well. So Bajaj Fin, for instance, has moved to the high point. We are also seeing traction in Hindalco. That's doing well. Something like an SBI Life too has moved into the green after being in the red for most part of trades. Decent moves on the mid-cap end of things as well. We have Dixon Tech, which is continuously doing well, 11,500 thereabouts for that stock, strides up 4.5%, and Oil India continues to surge. But speaking about Oil India and all these commodity-related stocks, let's shift focus back to the commodity markets. Manisha, what's the commodity you're tracking today?
Well, I'm looking at metals as a sector, and you know what, Mangalam, this week, it hasn't been such a great week because if you look at aluminum, we are in the negative. Copper prices are just about 0.5% for this week. Now, they're actually 11% off its all-time highs. The only thing that really seems to be holding well in this week especially is the zinc prices. As I said, it's mostly mixed to lower in this week for metal prices, but zinc really seems to be standing tall. The pressure that you've seen in metal prices has come in from the FOMC members projecting just about one rate cut in 2024. Zinc prices, in the meanwhile, have gained up by 3% in this week. It hasn't been a great last 1 month because that is still in negative for zinc by 4%. But when you look at the YTD numbers, the last 3 months, the last 6 months, zinc prices clearly seem to be holding on the higher side there. Well, if you look at the prices as well, an all-time high was at around 44.30. That was way back in 2022. This year's high is $3,050 a ton, but currently we are trading at 28.50. But we are better off from the kind of lows because the zinc prices have seen a decline almost up to 2,600 as well. That would have been very close to its cost of production. So some sanity returning in case of zinc prices there. The concerns also are because the low prices have led to mine closures, leading to deficit in sense of concentrate. Also, when you look at the TC charges, well, they are the lowest in many years, just about at around $100 a ton. And that is what the markets also are taking a cognizance of. So the TC charges actually are at a 3-year lows right now. Refined output also is estimated lower on a month-on-month basis at around 500,000 tons on a month basis here. The global zinc market surplus in the meanwhile also has declined. That's another factor that actually which could be slightly supportive. So in the previous year, the first quarter surplus was 200,000 tons. This year, first quarter surplus has declined to 144,000 tons, a surplus nonetheless, and that's exactly what the markets are worrying about. When you look at the prices also, as I was telling you, the last couple of years have not been so great. So we did see an all-time high in 2021. So we saw prices gain up by 34%. 22 and 23 have been years of decline, but this year until now we've seen 9% of gains, and the markets do believe that zinc is near its bottom. From here on, it's going to be cautiously on the higher side that you could see the prices move.
Okay, all right. Manisha, thank you very much for that. So a lot of those base metals in focus. By the way, the market's turned around big time, and it's actually banks that are charging higher. So keep your eye out on the Bank Nifty, ICICI Bank, Axis, HDFC Bank. All of them are charging away. And the Nifty is looking, a lot healthier now. So days high. And by the way, the Nifty Bank trading above the 50,000 mark. With that, we'll take a break. On the other side, our special segment, it's the economy coming up. Lata will get chatting with Alok Mishra, CEO and director at MFin, to put the spotlight on the microfinance industry. Stay tuned.